Hi, everybody. Welcome. This is Patrick Zielbauer. It is 3:30 on Monday, June 25th. Thanks, everybody, for coming to the event today. Let's read our risk disclosure and get started. All right. Trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. All right, so thanks everybody for coming to the webinar today. Wow, what a day. Oh man, I haven't taken a deep breath all day long, and this is just a reminder that the volatility is just not going anywhere. I mean, what we used to think as, slow summer trading, I mean, I know it's early on, but man, it sure does feel like this is going to be with us for a while. So it's definitely a reminder to stay nimble. A lot of our stock trading counterparts are starting to get a little bit more interested in futures as a result of days like today. I can sort of hear it in the conversations that I have with my clients and prospective clients as well. So it's really fascinating stuff. In this webinar, we're going to go through a whole bunch of examples of alerts. I have a lot of pre-made chart files prepared. For those of you familiar with Sierra, you can probably see across the top there's lots and lots of chart books open. So I hope to get through a lot of information today. I would like to make everybody aware that we are going to continue to build out this website we made called chartingclub.com. All right, if you haven't signed up here, go sign up here because we're going to start building more and more videos into this database. It's going to be searchable. We're already making a lot of progress with it, and a lot of resources are going into this. And you can also request custom videos and things. If we miss something, you could put a message in here, and one of our management will actually see it and get something out to you. So we are really building this out, so please feel free to sign up there. Also, this link that I'm going to put out to everybody in the room right now, I heavily lean on this website while I do these presentations, especially this particular section of Sierra's website, which talks a lot about the alert and scanning functions that exist within Sierra. So I just put that link out to everybody. Make sure you keep that link if you're interested in this sort of thing and you'd like to follow along after the fact with the recording. That is a really helpful link to have there. All right. And lastly, for anybody who's not familiar with this process, I do these events every Monday. They always cover a different topic. Sometimes they're a little bit more general. Sometimes they're specific. Sometimes they cover something simple, sometimes something advanced. But I make the files available for everybody. So anybody who wants a copy of the files that we're going to show today, please feel free to request it from your representative in our office, and we'll make sure to get them out to you. It's really a great way to learn. There's nothing in this presentation that is so complicated that someone in here can't accomplish this on their own. I can virtually guarantee you, if you spend a little bit of time with it, and you maybe watch the recording, in slow-mo, or watch the sections that are relevant to what you're trying to do, this is a great way to learn how to use the coolest parts about this software. All right, so for those of you who are unfamiliar, Sierra Charts, which we offer and support here at Infinity, I think we do the best job supporting this program in the business, is free if you do 10 round turns every 30 days. That means one buy, one sell 10 times in a 30-day period, or if you say buy 2 and sell 2 5 times in a 30-day period, or however you do the 10 total, then we will waive our fee for the charting, which is $19.95, which is still less than what you would pay Sierra directly if you went to go get their software. So it's a very, very good deal. And most of our clients, are not paying for the charts because the volume threshold is so low. All right, so that's where we will leave that. I really do want to get into the meat of the presentation here. As far as questions go today, I'm going to try to get to as much as we can, but I still am limited on time, and we have a lot to cover. So I might just rip through a lot of these things, and hopefully you can reference the recording as well. So if I miss a question today, nothing personal. I just want to try to cover a lot. All right. Okay, so what are we doing with these sorts of alerts? The whole purpose, this is not the type of alerts we're going to talk about today are not like putting an alert on the chart and when the market gets to that price and you get a pop-up or a sound. The objective that I have when it comes to teaching people how to use this program is to teach people how to use the program in a way that helps simplify their day-to-day experience as a lonely, self-directed trader, because that's what this business is. It's lonely. There's not a lot of community except online. Very few people have trading buddies they trade with in person. There's very little accountability to oneself because you don't have someone standing behind you, smacking you in the back of the head every time you screw up. So what I try to do in an effort to increase the longevity of my clients' accounts, which is in my interest as well, as most of you know, is to try to teach people a way to use this program in a way that reduces decision fatigue and promotes simplicity. All right, one thing I have found being on this side of the business for 14 years is that people who tend to look at lots and lots and lots of stuff at the same time tend to suffer decision fatigue at a higher rate, meaning they start to make poor decisions earlier on in the day than someone who's got a really clean and solid game plan. Now, does that mean that if you look at multiple time frames or you have lots of different indicators and stuff that you are a bad trader? No, it doesn't mean that at all. There's plenty of people who have a very naked looking chart who are probably terrible traders. But I believe that if you are forcing yourself to digest more and more information on a daily basis and you're not doing something to pare that back to only the relevant data points, you probably are doing yourself a disservice. That is just my opinion. So a lot of times in these webinars that I give, the theme is simplicity and clarity. And that's what I hope to drive home again today. So thanks again for coming to the webinar today. My name is Patrick. Please feel free to ask questions and let's get into it. All right. So the first thing I want to mention about the actual alerts themselves is that I like to the way that I like to use the alerts the most is by using a study that's called color background based on alert condition. So when you right click and go to studies and you get a long list of studies that's on the left hand side here, the two that we use the most are color background based on alert condition and color bar based on alert condition. All right. Now, I like to see when my bars are green or red, so I usually don't use the color bar based on alert condition study, which colors the entire bar a certain color when the alert conditions are true. I like to use the background color because it looks like this. All right, so it's a little easier for me to see, and I still don't lose the main characteristic of the candle, meaning like the green or the red color. So that's just my personal preference. You can also use the color bar based on alert condition, and there are a million permutations of this as well. But these two studies are the ones that we use the most. Now, the other thing that should be noted is that sometimes you can create alerts without any studies necessarily present on the chart. So there are data points that Sierra keeps track of and stores, like the high, the low, the open, the close, the bid volume, the ask volume, and some others that don't require you to actually have a study on the chart that is tracking that. As an example of something you would need to use a study for is if you had a moving average and you want to do an alert based on the moving average, you need the moving average on the chart. All right, but if you're doing an alert that's based on something like the high versus the prior bar's high, or the bid volume versus the ask volume, or something like that, a lot of that information is already being kept track of by the chart, and you can refer to it with very, very simple abbreviations. Okay, where do you find out what those are? That same website I was telling you earlier. If you go to the section right here that says available main price graph identifiers, I'll just link everybody to that part of the page right here. This is where a lot of the what they call main price graph identifiers are present. So O is for open, H is for high, L is for low, C we use a lot because that means the close or the last price of a bar, V for volume, and some other ones. The one I'm going to show you here real quick, because there are so many people interested in order flow, are the bid volume and the ask volume of the bar. So let's show that as an example. Keep in mind, if you're an order flow trader, don't be offended by the fact that I'm only showing this level of analysis in terms of bid versus offer volume. I know it's a gross oversimplification of what you're doing, but just a very good example. So the first thing I did was I added a study here that's called color background based on alert condition. And what you do is you add the study, and then you go to the settings button on the right-hand side, and the subgraphs tab is where you pick the color. So it defaults to this gray, this like dark gray color. What I usually do is I'll choose a color that represents like a bearish or bullish type situation, and I pick that color. The settings and inputs tab, you really don't have to do much in, except for if you want the color to appear in a different region of the chart, meaning this is region 1 up here. If you wanted the color to appear down here, like where a MACD would go, you could put it in region 2, etc. If you wanted to calculate lots more bars than 2,000, you can also put a bigger number here. 2,000 is the default. So if you put it to 20,000, just bear in mind there's a lot more calculating happening in the background, and that's just a resource issue. So the sum of it is that when you're using the color background study, more often than not, you're not editing anything in the settings and inputs tab. So sort of check that off your mental list of things that you have to remember to do this properly. All right, the subgraphs tab, the only thing you really need to do here is the color. That's an easy one too. So again, pick a color that represents the signal. The alert tab is the guts of the study. So the alert tab is where you're actually going to put the code, and I use that term loosely, for the alert that we've picked. So when we look at these operators, bid volume and ask volume, can anybody tell me, just by looking at what I have here, what is the condition I'm looking for in this case? Okay, so with this code that's right up there, knowing that BV is the bid volume and AV is the ask volume, what is it we are attempting to discover? Right? Delta, the bid is 3 times the ask, etc. Correct, correct, correct. So everybody's right. So the idea here is that this says bid volume, or BV, is greater than 3 times the ask volume. Okay, bid volume is 3 times the ask volume. So that is basically a bearish condition. All right, that means that the bid is getting slammed. So for example, if a whole bunch of orders are coming through and people are hitting sell market, sell market, sell market by the hundreds or thousands, that is bid volume. It's volume done on the bid. The converse, the ask volume, is if people are hitting, let's say, buy market, buy market, buy market, buy market, that is ask volume. That is volume done on the offer. So in this case here, I'm just asking the chart to tell me when the bid volume is greater than 3 times the ask volume, which represents a dramatic imbalance in the bid versus the offer volume. So what order flow traders will do a lot of the time is they will look for these deltas, okay, the difference, to be significant enough for it to be meaningful. Right? I'm just picking 3 out of a hat, but what I like to see people who are doing this sort of order flow trading do is realize that this sort of data is available to anybody. You don't need to buy a $5,000 add-on to your charting program in order to see things like order flow imbalances. Anybody can do it. All right, and this is just one of many ways to do it. So in this example, the bid volume is greater than 3 times the ask volume. That's what's generating this red line, this red bar in the background. This means that in real time, the chart is detecting this. Now, you might have seen when I was talking at the beginning here, there was a line flashing here because that condition was also true in the current bar a few minutes ago. It's no longer true, so it went away. And on that note, you can choose to have the chart only evaluate these conditions on the close of the bar if you prefer, if you don't want it to be done in real time where it might be true 1 second and then untrue the next. Right, you have that ability. That's under the settings section. Also in the alert tab, it's this option right here that says evaluate on bar close, or you can associate a sound with it as well if you want to. I typically don't, but these are usually unchecked for me. But if you want to wait till the close of the bar for the condition to be evaluated, that's what this is for. Don't worry about any of the other options right now. All right, so that's our first example. The second one here, if we go to the second instance of the color background based on alert condition study, you can see it's the opposite. The ask volume is greater than 3 times the bid volume. So that means that the volume done on the offer is significantly higher than the volume done on the bid. So what that usually means is that there's a big buyer who's getting long or offsetting a painful short. That's a lot of times what that means. So if the offer is getting hammered like that, that means that one or more big buyers are coming in and they are hitting the offer aggressively to the point where the amount of contracts being done on the ask or the offer is dramatically higher than those being done on the bid, to the tune of 3 times in this case. All right. Arthur's question related to the bid volume or ask volume, what he's asking is, does that mean the number of contracts sitting at the bid or the offer, or does that mean trades that already occurred? And these are trades that occurred. So these are trades that are occurring in real time. All right, not just contracts waiting to be bought or sold. All right, these trades actually have happened. All right. Okay, so that's just one simple example. Now, one thing, oh, there it is right here. Look at that. So that's happening again right now. So if we were to put a study on the chart that showed the bid offer and the bid volume and the offer volume, we would see those disparities right now. But we don't have to have that up here because the chart is telling us, without that present, which is kind of neat. Okay, so on the chart on the right, what's the difference between these two? Well, one of the things I wanted to introduce, and I'll talk about it a little bit later as well, is that you can be testing for more than one condition at a time. So in this chart on the right-hand side, I have the color background study on, and if we go to the alert tab for this, we can see that I actually have both conditions being tested for. So this is less directional. It's only one color. I made it a gray color. And the idea here is that the chart, this particular study, is looking for this condition to be true, which is the ask volume greater than 3 times the bid, or the bid volume being greater than 3 times the offer. And I'll give another example of an OR condition later, but the idea is that the charting program can test for either OR type conditions as well, and it doesn't have to be limited to 2. So as long as they're all the conditions are separated by a comma, and they're inside the parentheses, as long as any of them inside the parentheses are true, the word OR is at the front, then the entire condition is therefore true, and you will be notified visually. So there's a and an OR function we'll talk a little bit about as well, but just be aware that as a trader, a lot of times traders are looking for anomalous events to occur, not necessarily direction. You're just looking for some flurry of activity that sort of leads you to the next thing. And that's what this would be used for detecting. All right, so this is just a brief example of how you can use the OR condition to look for more than one thing, not necessarily more than one thing, but one of many things happening at the same time. All right, so it's testing everything inside the parentheses. So that's just one example using the bid volume versus the ask volume. Let's go ahead and move on to something else. Okay, another thing that, this is not a great example because it's true so much, but we can make some changes. This is another condition that I haven't really messed with a lot lately, but Sierra just basically taught me how to do this, and that is you can also use the average of one of these operators for the current bar, which is 0, to X number of bars in history, which in this case is minus 5 bars, so 5 bars ago. So what this is basically saying is that the volume is greater than the average of the volume 5 bars ago, or over the last 5 bars. So you could actually change this number, which would affect the output and the visual appearance of the study like this. So I haven't really put this into play a lot lately. I just started reading about it a little bit today. But if you are interested in looking at a current value as it relates to an average of prior values, you can use this function. Another really simple thing to do would just be use a simple moving average. Okay, that sounds a little easier, but I just wanted people to be aware, for those of you who normally come to these events, this is something that you have the ability to do as well. All right, I'm not going to spend a lot of time on that one yet because I don't have a lot of insight to share, but that's just another function that exists. All right. This one here is a lot more directly related to something that I look at on a general basis, and that is, for those of you who are familiar, I have this little chart theory called the Value Area Breach Project, and this is sort of a demonstration of that. But here's an example of an AND condition occurring, okay, similar to the OR condition. So these are developing volume value area lines. So what this means is that when this blue condition occurred, 70% of the volume traded in the session had taken place between this red line, dotted line, and this green dotted line. So this range is constantly changing as more volume continues to take place. And if we were to go to the current, all the way to the front of the chart, wherever the lines are now is where the current value area is. So I have a belief that a lot of times when you see the market breach through a value area to the downside at the same time that an oscillator like a CCI is making an extreme move, a lot of times you get a reversion to the mean. And so I built a system, and again, this is a simplification of that system, that looks at when the market breaches the value area to the downside, and at the same time, the CCI breaches below the negative 200 line, or the opposite would be if the market goes up through the upper value area, and at the same time the CCI goes above positive 200. So in this case, it was all to the downside because the market was breaking so strongly. But here's an example of how that condition looks. So we have the commodity channel index, got the volume value area lines. So this commodity channel index is down here. The volume value area lines are up here. And then I've got two conditions. Okay, one of them is blue, okay, and one of them is pink. All right, the blue is the buy signal and the pink is the sell signal. Okay, we don't see any sell signals on here right now. If we scroll back in time, we might see a few. Let Maybe not. Okay. So how do we get the code to line up in a way that's showing this, this display? Well, if we go to the studies section and go into the alerts tab, all right, we're going to see this function here. So when you look at this the first time, most people their eyes just glaze over the second they see something like this. It's really not that complicated. You just have to break it down into individual pieces, and you start to sort of think in this logic. Every indicator has an ID number and a subgraph number. So when you look at this here, all right, this reads as ID1.SG1. So ID1 represents study ID number 1, and subgraph or SG1 represents subgraph number 1 of study number 1. So how do you know what one is what? Well, if you look at the studies list, you can see there's an ID number at the front. And if you go into the subgraphs tab, you can see each one of the lines, the inputs, has a subgraph number. So when we look at the CCI, the way that we read the CCI is ID1.SG1. You can use the colon in between here if you want to. You don't have to, though. So ID1.SG1 is how we would look at the CCI. And then these two lines, these represent our 200 and negative 200 lines. And the way that we know that is by going to the Settings and Inputs tab. And we can see the line 2 value here is 200. The line 3 value is negative 200. So we could change these if we wanted to. So I put them to 200 because they're kind of extreme levels and they usually don't sustain for very long. So if we look at again one more time at subgraphs, we can see that line number 2 is SG3. So that's going to be ID1.SG3. And then ID1.SG4 is this lower line here, negative 200. And so when we're looking at this color background study under the alerts tab, this is where we are seeing the first relevant piece of the study, meaning the CCI has got to be below this negative 200 line in order for the condition to be true. So ID1.SG1 is less than, that's the CCI, is less than ID1.SG2, which is this lower 200 line. That's the first part of the condition. You'll notice that it's separated by a comma. All right, the whole thing is encapsulated with the word and a giant parentheses around the whole thing. And that's what makes it so that both of the conditions inside the parentheses have to be true in order for the study to be true, or the condition to be true. All right, the second part of the condition involves an operator called the cross from above, which we will talk about in a bit. And that is looking at C, which is the current price, and then ID2.SG3, which is this lower value area line. So the two conditions, again, are the CCI has got to be breaking down pretty strong, and the market has to be going through the value area low from above, cross from above, C, comma, ID2.SG3. And if we look here at ID2, volume value area lines, SG3 is this one right here. All right, so ID2.SG3. So a lot of times what I will do is I'll write these things into Notepad or Word or something like that. It's really hard to remember them. I know, right off the top of your head, but it gets very easy as time goes on. But the general idea is that you might end up with some code here that looks pretty long and scary and intimidating, but no one just types this out like magic, okay, like they're in the Matrix. All right, they're looking at each condition one by one by one, and you just put them all together. And normally you just got a big parentheses around the whole thing. So it's actually not that bad. It just takes a little bit of practice to stay organized and make sure that you understand what each piece, how each piece refers to the subgraph of the study that you care about. All right, so this is an example of how an AND condition might be working. All right, hold on for 1 second here, guys. Okay, so I have a fan running in here because it's like 10,000 degrees here. So some people were telling me that it was creating some background noise. So maybe that's a little bit better. Sorry about that. All right, so let's try and move on to to the next option here. All right, we've already talked about the average operator. We've talked about bid versus ask volume. Let's talk briefly about this cross from above, cross from below, crossover function one more time. All right, so on the left-hand side here, we've got a couple of studies. We've got a moving average and then a couple background, color background based on studies. We've got another one that looks very similar, and then there's another one here with the MACD at the bottom that I'm going to try to explain. All right, so on the left-hand side, if we go to studies, we've got a moving, I put a Hall moving average on here. All right, so if we go to settings, we can see it's I think a 75 period Hall moving average. All right, it's this blue line with the value of 7,045, give or take. And then we've got a couple of different color background based on alert condition studies. Okay, so the first one is cross from below, and then you have an open parentheses, C, and then the identifier for the moving average. The nice part about incorporating moving averages into this sort of a setup is that they usually only have one subgraph. So it's usually just the ID number, ID1 in this case, dot SG1. So the condition that's generating the blue line is when the market C, closing price, crosses the moving average from below. And that's when we get the condition, the true alert condition. All right, the opposite, if we go to color background based on alert condition here, that's generating the red background, is cross from above, open parentheses, C, comma, and then the identifier. So it's just really not that complicated. I don't know how much simpler it can get than something like this, but if somebody has questions about it, please feel free to ask. But this is a very simple example of how to employ the cross from above or cross from below functions. All right, the other thing to just remember is that if you're using cross from above or cross from below, it's always, 9 times out of 10, people use the last traded price, which is C. And so you've got C, comma, and then the subgraph. So this is crossing this. So it's the thing that's crossing is on the left, and what's being crossed is on the right. All right, so the current price is crossing the moving average. All right, that's how this is formatted properly. All right, now if we look at this one in the middle, this is one example of instead of using the cross from above, above or cross from below, we're just using crossover. So when you have the current price crossing the line, we're getting the behavior of the gray background, right? Because of this gray color. So if it's non-specific, if your alert is non-directional, if all that matters is that something is happening, and then you're going to take it from there, that's when you could use crossover instead of cross from above or cross from below. All right, does that make sense for everybody so far? All right, if it doesn't, make sure you ask. Okay, we'll see if we can clarify. And then on the other side here, a good example of the use of cross from above or cross from below, or crossover, is like a MACD. So whenever you've got a condition occurring where it's not necessarily that important, again, the direction of the cross, but rather that the cross is occurring in the first place, a lot of times that happens with oscillators that have a zero line. So if you like to look at an oscillator or something at the bottom of the chart that has a zero line when you want to be notified when that zero line is breached, that's a good example of when you might use the crossover command instead of cross from above or cross from below. So if we look at MACD, that's study ID number 1, and we look at the subgraphs tab, this line, this black line, is subgraph number 4. So the way we would refer to this is ID1.SG4. Okay, ID1 is the MACD, SG4 is the line. That's this black line right here. And if we go to the color background study and go to the alerts, we're going to see that what we're looking at here is the MACD itself, ID1.SG1, comma, ID1.SG4, which is the zero line. So this is the MACD itself, the MACD calculation. And then this here is the zero line. So when this one is crossing this one, whether it's from above or below or whatever, we're being notified. So this is something that could easily be combined with other studies as well if you are looking for some confirmation. So if something and something else are true and the MACD is crossing over in the same bar, that could be a giant AND condition that meets all your requirements. The neat thing about this, guys and gals, is that if you feel like the chart is cluttered with so much nonsense that's making your head spin, you can hide the individual studies. So if all I care about is that the MACD is occurring, the crossover is occurring, I can just check the hide button and apply it. And the calculation is still going to occur in the background, but I don't necessarily have to have the MACD visible. I've said it a million times before. There are situations, of course, where hiding the study doesn't make any sense, or if seeing the trend of the study or something like that is relevant, but a lot of times it's not. And sometimes you think it is, but then you realize that your trading performance or behavior really doesn't indicate that there's a huge link between how far back in time you look at a study and how well your trade ends up being. A lot of times all that matters is that the condition is occurring. So when I say simplicity and clarity, that's kind of what I'm getting at, is this is a good way to pare back the amount of stuff sitting on the chart and chewing away at your ability to process and make good decisions. All right, so please force yourself to evaluate that reality. It's not an easy thing to do, and sometimes it involves taking stuff off the screen that you have spent a lot of time or money putting on your screen. So it's not easy for people to do in general. Okay, so here's another pretty cool example that I think is actually pretty relevant, and this is an example of how to detect when a moving average is X number of points away from the current price. So a lot of times when people are looking at moving averages, they're not just looking at crossovers, they're looking at deviations between the current price and where the market is right now. And one easy way to do that in Sierra is to use this color background based on alert condition study and employ this absolute value function. So ABS means absolute value. Okay, if anybody remembers what absolute value, I mean, I'm sure there's a way more complicated explanation of this than what I'm about to give you, but if you have a negative number that's a result of this, it makes it positive. All right, so if the closing price minus the value of the moving average is a negative number, it makes it positive. So as an example, if the closing price is 100 and the moving average value is 105, then that value is -5. The absolute value of -5 is 5, right? So what this is doing here is it's saying, okay, what's the difference between the closing price and the moving average? And if that value is negative, make it positive. And whatever that turns out to be, if it's greater than 28 ticks, or in this case, 7 full points of the NASDAQ, then I want to be notified. So if the moving average in this case is greater than 28 ticks away from the price, then that's what I want to be told that. And then this value can obviously be adjusted. So if I wanted to be a little bit more picky, I could say, all right, I only want to be notified when the NASDAQ is 40 ticks away from the moving average. Okay, if I push apply, you can see we're going to start to pare down the number of true conditions. So a lot of times when you see a moving average that's really far away from where the market is now, that's an extended market, right? That usually something's going to happen. It's either going to bounce back or it's going to continue, but not at the same rate as a slow plotting market, right? So if you want to be notified when something's out of whack, especially on a short time frame, this is kind of a neat way to do it. So again, it's not necessarily directional. I mean, one would think that there's a trend following opportunity here, but the bigger deal is to notify you when something is sort of seemingly strange. And so we can increase these numbers here to filter out the signals, and in a more volatile market, maybe make this number a little bit bigger. But this is, it's an easy way to be notified when something like this is happening. And personally, you may not even care really in this case what the moving average is, because you don't really care about the moving average. What you care about is that the market is behaving in an odd way. So this is a good example of a place where you could easily hide the moving average itself and just ask the chart to tell you when it's really far away, from its current price, because you might have other things that are, giving you more specific signals that are directional in nature. All right, so this is probably the easiest thing to employ that to me has real meaning. I mean, a lot of these things are really cool in terms of theory. This to me is something that could easily be employed by anybody who's looking for, who wants to trade a market that is moving a lot. Okay, and the NASDAQ obviously is a great example of that. When the NASDAQ is, this far away from its moving average, that is meaningful. All right. Okay, does anybody have any questions on that example? If you do, make sure you let me know. Okay, otherwise I'm going to keep plodding ahead here. Okay, so this one is another OR condition that is related to the CCI. All right, this is sort of like the value area project thing we were talking about before. And it's also another example of when you might be looking for an OR condition, meaning something is happening. Doesn't necessarily mean it's up or down, but something strange is occurring, and this is an easy way to detect it. So the CCI, what I've chosen to use in this example is when the market is above the 200 level of the CCI or below the negative 200 level. So if you recall the subgraph numbers for the CCI, okay, in this case it's ID number 1, and then you've got these subgraphs. You've got the CCI itself being subgraph number 1, this line up here being subgraph number 3, and then this one here being subgraph number 4 down here. So the code should start to look pretty familiar. If you go to the alerts tab, it's an OR condition, meaning either of these things are true. The CCI is greater than the upper line, comma, the CCI is lower than the lower line, and then end parentheses, or in front of the entire thing. So again, the first time someone looks at this, it really does look like gobbledygook, and I'm serious when I say it makes people's eyes glaze over, but you start to break it down into these pieces and it just doesn't feel so intimidating. And again, don't be afraid to pull up Notepad and copy and paste and make notes. The CCI upper line is SG3, CCI lower line is SG4. Those things will help you get a feel for how to properly place these. All right, so that's a really simple example of an OR condition. All right, I'm going to skip a couple of these because I want to come back. They're really, really neat. But there's a couple other ones that I would like to show as well related to some other operators. So one of them is the use of some of these really simple pre-made studies that Sierra has given us. So sometimes a study doesn't have an obvious numeric result, and that is usually true when the output of a study is either true or false. And like any good computer program, Sierra uses the number 0 as false and anything greater than 0 as true. So one example of a study that is pre-built is the MACD crossover system. So if you add the MACD crossover system to your chart, which is right here, you don't need a MACD down here. You just need the MACD crossover system. And what it does is it's got its own inputs just like a regular MACD, and there are simply two outputs. One of is a bullish MACD and one is a bearish one. So when ID number 1, SG number 1 is true, that just means it's greater than 0 if you want to use an alert. And when the sell signal is true, that means ID1, SG2 is greater than 0. All right, that means that the alert is not 0, meaning it's not false. Okay, so again, very binary, but it's really easy to incorporate these pre-made studies into your alerts because you don't need the original study and you don't need to be fumbling around with too many subgraphs. So the first one here, color background based on alert condition, that's this blue, this light blue line. Okay, the MACD crossover system is putting the arrow here. This particular study is saying, all right, when the subgraph number 1 is greater than 0, I want to be alerted. So obviously this is redundant. You wouldn't do this on its own, but this could easily be incorporated into something else without you having to have a MACD even on the screen. So if you wanted to say, okay, when the MACD crossover is occurring, a bullish MACD crossover and something else is happening, then you could easily incorporate this into an AND condition. All right, so that is if the bullish MACD crossover was occurring, and then I just added another study for the bearish one. ID1.SG2 greater than 0, meaning that subgraph number 2 is not false. Okay, it's true. Therefore, we're getting the this light pink background. So the magenta arrow there is the MACD crossover system. This background is my condition alerting us to the fact that this is happening and could easily be incorporated with another study. Okay, so that's an example of the MACD crossover system. This one in the middle, okay, there's also a stochastic crossover system, same idea. Buy and sell signals. They have little arrows that you can have displayed. This one's a little green arrow. You can barely see it. Here's a red arrow. So those are the study itself, the stochastic crossover system putting the arrows on. The background colors are of my doing. All right, so that's another example. And then another one here on the right side, there's actually another study called the moving average crossover. So if you want to be able to just not have to worry about adding the moving averages and then using the crossover logic and all that, there's actually a study called moving average crossover where you can put your inputs in. So here's my 8 and my 34 period EMAs, and the subgraphs tab, I can put the colors in. And then the subgraph numbers on this one are a little different. They're SG3 and SG4, but cross from bottom, cross from top. You can see the alerts are here, and they line up exactly with the arrows that the indicator itself is putting on. So sometimes the reason I'm showing this is sometimes you will use a study that has a true or false output. And if you are in that, these are three good examples of that. And if you're using a study that has a true or a false output, the way to test for it to be true is to use that subgraph number greater than 0. That's how you tell the chart to notify you if that is true. All right, so that's not how most studies work, but certain studies do have either true or untrue functions, and this is one of them. Or these are three of them. All right. Okay, a couple other ones that I wanted to talk about. We talked about this a little bit last week, but I did want to go into it a little bit more this time. So as we talked about, there are several different main price graph identifiers: high, low, open, close, V for volume, BV, AV for bid volume, and ask volume. Here's an example of how someone could use these studies or what's already on the chart as basically their own indicator. And this is a kind of a neat way to sort of talk through the psychology of the marketplace and how you perceive it. So I just added this study here called color background based on alert condition. And here's what our code looks like. So as I mentioned, L means low, H means high, C means close or current price. The -1 that you see in brackets refers to the same operator, in this case the low, except 1 bar ago in history. So the first condition here is that the low of the current bar, which is L, is less than the low 1 bar ago. So that means that we had to make a lower low in the current candle in order for this part of the condition to be satisfied. All right. The other part of the condition is that the high has to be greater than the high 1 bar ago. So at this point, we basically have, what do they call that? An outside bar, I believe. When the high and low of the current bar exceed the high and low of the prior bar. Okay, but lastly, I've incorporated this other function here, which is that the current price has to be greater than the high 1 bar ago, which means we have to be going, at least at the moment of the alert, we have to be going higher. Because we're not just testing for an outside bar, we're testing for an outside bar plus the current price being above the prior bar's high. So you're looking for a market in this case that has gone down and that has gone back up and is currently higher than the prior day's high. So that could be something you could fade. That could be trend following. I mean, there's lots of different applications to something like this. But if in your mind, as you see these bars form, if you wanted to be alerted when a certain condition were true, this is an example of how you could do that. I actually flipped this basically to be the opposite on this middle chart here. If we right click studies, all right, this one is very similar, but again, to the downside. So the low is lower than the prior low. The high is higher than the prior high, but the current price is lower than the prior low. So this market has taken out yesterday's low and, excuse me, not yesterday's low, but the prior bar is low and the prior bar is high and is now lower for this condition to be true. All right, what I have found too is a lot of people have given me feedback on these types of conditions. This is one situation where we do see people use this evaluate on bar close a lot, because they don't necessarily want to see this kind of forming in real time. They just want to know if if their idea has been affirmed by the market closing in this state. So that might be one situation where you wait until the bar to close before the signal is evaluated. All right, and then over on this chart here, okay, this one was kind of interesting. So what I was trying to do was incorporate something very similar to the prior chart, which was the one in the middle. Okay, the low is less than the low 1 bar ago. The high is greater than the high 1 bar ago. The close is lower than the low 1 bar ago, but the volume is lower than the volume 1 bar ago. So what you're looking for here is, in theory, a fading opportunity, because you're looking for the market to have broken lower, to have broken higher, to currently be lower, but on lower volume. And you know what they say, and I'm sure everybody here has seen this, markets tend to trade lower on high volume. So if you see a market breaking down on low volume, that could be bullish. That could be a false break. So you can incorporate volume into these ideas as well. It doesn't necessarily just have to be the characteristics of the bar itself, meaning the open, high, low, and close. So this is basically testing for the market to be breaking lower, but on lower volume. Sometimes you'll see, if the market does break lower on low volume, it could be a bit of a fake out. So this is a way for someone to detect, something like that. John suggests that engulfing scan would be interesting with a distance from the moving average filter. Yes, that's exactly what I'm talking about. So you could definitely combine those, those together to some degree. All right, that just all in one big gigantic and condition, it could definitely be applied. All right, so that to me is a good example of how to use the high-low operators. Okay, what Sean suggests or asks here, can we do a percentage on volume or just 2, 3, 4 times average volume? I mean, you can do 1.2, 125%. It's just numbers. So the volume is less than the volume 1 bar ago times 1.25, for example. So as long as it's in the right spot as far as the parentheses go, you could definitely do that, Sean. All right, it doesn't have to be a whole number. All right, so you can't put it in a percentage format, but you could do, times 1.25, for example, would be 125%. Cool. All right, good. Yep, you're welcome. Okay, one other thing that came up last week that I wanted to touch on, and then we're going to go to two sort of really cool ideas that we haven't talked about in a while. And one person asked me last week, could you apply these to drawings on the chart? And the answer is yes, you can apply these to drawings. I drew a horizontal line here on the stochastic at this 85 level. And then we had a study here that basically said, okay, when the market crosses that from below, we want to be notified. So you can apply this same idea to drawings. It doesn't have to necessarily just be studies. And furthermore, it doesn't just have to be drawings on the main price graph. It could be drawings anywhere. So this drawing is in region 2, down here where a stochastic would go. And the way that you can identify the drawing and the characteristics of the drawing is by right-clicking on it and go to Chart Drawing Properties. And there's this Anchors tab. And so this is this process is not very intuitive, and in my opinion, it can be and should be improved. But basically, you have a line ID and then an anchor. And so the line ID, it looks here like a negative number. You actually always use a positive number. So this would be line ID number 4. And then there's an anchor. In this case, it's A1. And the anchor is 85 because there's a horizontal line. So there's only one price. If you use like a trend line or a ray or something, there's usually one starting price and then an ending price. So you have an anchor 1 and an anchor 2. In this case, you really only have one anchor and one line ID. So the formatting to incorporate the cross from above, cross from below, or any sort of other function is if you go to studies and then color background based on alert condition, it looks like this. This is the format. So in this case, this code is basically saying, okay, when the stochastic, which is id2.sg1, it's this blue line, is crossing this drawing from below, then we want to be notified visually with this color. So this UDID, that is like user drawing ID number 4.A2, which is the anchor. And so that's this is a process it's not 100% intuitive in my opinion just yet, but if you are of the type where you would like to be able to include your drawings in your conditions, you could definitely do that. Just be aware it is doable. It just doesn't seem as smooth as some of the other processes that exist within Sierra, and I think it probably will be improved. But you can incorporate drawing tools into the alert conditions as well. All right. Okay, a couple other things that I wanted to, let's see, we've already covered, I think, pretty much everything on the top with the exception of these two. Okay, this is pretty cool, and this is something that was asked last time that I would like to demonstrate. So what we basically have here on the left is a 60-minute chart with a 34-period EMA, and then we've got a 5-minute chart. And you can see the colors in the background. Something kind of looks familiar. You're trying to figure out what it is. And then you've got this overlay here. This blue moving average is the 34 EMA from the 60-minute chart being overlaid onto the 5-minute. All right, so in other words, this moving average from the 60-minute time frame is actually being broadcast onto the 5-minute chart. Okay, that's what we call a study. That study we call study price overlay. And what we're basically doing is we're just broadcasting it over here to the point where we don't even necessarily need the 60-minute chart up unless we really need to have it up. If what you care about on the 60-minute chart is the moving average, not necessarily the 60-minute chart itself, then why have the 60-minute chart up as well? That's the justification for something like this. So you can actually take a study from one chart and overlay it onto the other one. But to take that a step further, you actually don't even necessarily need to do that if all you care about is the positioning of the market versus that study. So on the left-hand chart under studies, there's actually only 3 studies that are here. On the left, you've got the moving average, and then you've got a color background, which if you look at this, you could probably tell what the condition is. All right, in this case, the first one here with this blue color is when the current price is greater than or equal to the moving average. All right, and then the next one is when the current price is less than or equal to the moving average. So there's only 2 possible colors. One is light blue and one is the light red. One of those will always be true. All right, so what we're basically doing is we're creating a filter for people to take themselves out of situations where they get into trades that are obviously against the main trend. So if you are in a situation or have been in a situation where you find yourself taking counter trend trades when you know that's a huge weak point, then first what you need to do is define what you're going to consider a trend. In this case, for example, the market being below its 34 EMA on a 60-minute chart is what I have chosen to define that characteristic. And if the market is below that and I have this red background, I just don't take any long trades, period. It's a great way to relieve yourself of the responsibility of getting into avoiding a long position when you really want to take it. So it's like you're putting the responsibility onto the chart to make that decision for you. And you just make a rule. If the chart's red, I don't go long. And now maybe it's not a 34 EMA on a 60-minute time frame. Maybe it's something else. All right, that's part of the tough question. But the idea here is that a lot of times people will use these background colors as a way to sort of put the pressure on the charting program and off of them in terms of avoiding these trades. And sure, there might be some times where you miss good ones and that's annoying and whatever, but you may feel rewarded when you keep yourself out of some really bad ones, which is more important than necessarily getting into a good trade. All right, capital preservation is the key. So what I've done in this example is instead of just overlaying the main price graph, the moving average, I actually overlaid the result. So I'm overlaying the color background study onto my 5-minute chart. So when I'm looking at my 5-minute chart, I can tell without even the moving average being displayed, I'm going to hide it right now. I can tell you by looking at the 5-minute chart that the market is currently below a 34 EMA on a 60-minute time frame because the entire background is red. So the way that we did that was just using this study price overlay function. And I'm going to demonstrate one quick example of it right now. And then you can use it as a basis for learning how to do this on your own. And we actually document this pretty well on our YouTube channel as well. But let's just say I wanted to add another moving average. So I'll just go to moving average. I'm on the left-hand chart right now. So I've got a moving average simple. I'm going to move this, I'm just going to click to the down so it goes to the last one. So this goes to the bottom of the list. Click add. And then for the settings, let's just make this something quite obvious like 50. And then we'll just change the color of it, and I'll just thicken the line up a bit so we can see it. Okay, so now we've got a 50-period SMA on the 60-minute chart. So what we do is we go over to the destination chart, in this case the 5-minute, go to studies, and I'm going to click to the bottom of the list. We're going to add a study called study price overlay. So you click on that, click the add button, and then this is one of those studies where you can't just apply it. It's not like a moving average. You got to tell the chart what it's doing, where it's taking the indicator from. And you just click on settings and go to settings and inputs. The very first one at the top is really the main one you want to look for. So the first thing you'll see is when you click up there, you get these drop-down menus. This one over here represents what chart are we pulling from. So this is going to be a drop-down that contains all your charts inside this chart book. All right, the 60-minute is the one I want, so I select it. And then on the right-hand side, what is it from that are we overlaying? Are we overlaying the EMA? No, we already did that. Are we overlaying the color backgrounds? We already did that too. We're overlaying the simple moving average that we just created. So select that. And then the only other thing you may want to check on before you apply it, and although applying it doesn't have any permanent consequences here,
is the region number. The chart does not know that you want this overlay to happen in the main price graph, which is region 1. So you're going to most likely have to change this to region 1 if whatever you're overlaying you want in the main price graph. If you were overlaying a MACD or a stochastic from a chart onto another chart, you'd probably want to leave it in one of the lower regions. All right, but in this case, it's a moving average, so I'm just going to put it in region 1 and push apply, and you can see that we're going to get that behavior immediately. So that's how you use the study price overlay study. It's a really cool way to consolidate the number of charts you have to look at, because not all of you, many of you probably use these little data points from some of these other time frame charts, but you don't necessarily need all 8 of them up on the screen confusing you at the same time. So this is a great way for you to actually force yourself to inventory the decision-making process you use to get into these positions using whatever multi-time frame analysis you're using. Okay, so to get the color background, over, it was the same process. All I did was right-click studies, and I just added the study price overlay study, and then chose the color background and just repeated that process twice. So once you apply the study price overlay and you indicate your selection, it changes the name of the study on the destination chart to whatever chart you're coming from and whatever the study is. So these are all 4 of these are overlays from chart number 1, which is the 60-minute. Here's the EMA, the 2 color background results, and then the SMA that we just created. All right, so hopefully you find that useful. Now this has this other really neat application that I want to show now. Michelle, I do not believe you can overlay a study from another chart book. I don't think you could do that. I think you'd have to have it in the same chart book. I'm almost positive of that, but maybe someone can correct me, but I don't think so. All right, so a long time ago, I was experimenting with this idea of overlaying conditions instead of the indicators themselves. And I created this idea that I called the Ichimoku Cloud Scanner. Okay, so anybody here familiar with the cloud, Ichimoku Cloud? In the cloud, above the cloud, below the cloud, that sort of thing. So what I basically did was I created this color background study that looks at where the market is relative to the cloud. So let's try to make this bigger. Hang on. Okay, so like this one up here in the top left, this is the S&P. The market is below the cloud, so the chart is red. All right, and over here, the market is in the cloud. The chart is gray. All right, back here, the market is above the cloud. The chart is blue. So what I was getting at with this is that similarly to what I was talking about a moment ago about people trying to keep themselves out of bad trades, I had clients who would tell me that, I'm really good on the short side, or I'm really good on the long side, or I have this sort of reversion to the mean idea that works really great when the market is choppy and all my trading buddies are, complaining, but it works great for me. So the idea was to set up something on whatever time frame you want. In this case, these are all 60-minute charts that would basically show you the general condition of the market relative to some study or studies, and then display an output in the form of the color background. And then what I ended up doing was I ended up overlaying those particular condition results onto another chart like this. So this chart in the bottom right is an S&P chart, although I don't really care about the main price graph at all. What I want you to notice is that see how it's red, gray, red, gray, red, gray, red, gray, and then blue? That matches this behavior up here, right? So red, gray, red, and then a mishmash, and then blue. So what's happening is I actually overlaid the result onto a chart like this that effectively created a scanner that gives me a visual representation of the behavior of the market relative to the cloud study. And the reason I found this was really neat is because some of these customers would say, Patrick, I do really well when the market is, it's trending down, but there's still some confusion. But I really do badly when everything is bullish. So if a customer were to look at the S&P and see a lot of red and a lot of gray, that would be a market that he or she might focus on. Whereas if that same customer sees a market that down here on the scanner has lots of blue, they might say, you know what, I'm just going to stay away from that one. All right, so this is in the bottom right of the bottom right-hand screen, Ashvin.
All right, so what I'm going to show you now is how this ends up sort of getting created, and then anybody who, this is a great file for everybody to request. So if you want access to this, you can have it, and it's cool to work backwards off this, and you can save it. And if you screw it up, you could just re-download it. So we have the S&P up here. Let's look at gold. So gold here, we zoom in a bit. Okay, it's below the cloud now, and then it's kind of like a mishmash of they're all in here. Okay, so how do we get that data onto this bottom right screen where it sort of becomes part of our scanner? Well, you can right click and go to studies, and you can use the study price overlay study. So I'm going to add the study price overlay study, click on settings. All right, what study are we overlaying? Well, let's go find our 60-minute gold chart. Here it is. All right, and then what are we overlaying from the 60-minute? We are going to overlay the cloud condition, which are these three at the very bottom. So whenever we're greater than the cloud, let's add that first. We're in region 3, which is good. This is region 1 here. This is region 2. The next one below that will be region 3. So I add it, and I'm getting only the above cloud colors. That's these blues. Then what I'll do is just duplicate the study like that, duplicate it. And then now let me add the below cloud colors. Same region. There's the below cloud colors. And the way you can always tell if you're on the right track is you want to make sure the front matches the very last color you see on the main screen. So it's red and red. Push OK, duplicate the chart or duplicate the study one more time. Go to settings. Let's do the in-cloud colors. Fills in the blanks. So I just ended up repeating this process over and over again. And like I could duplicate this gold one, move it down in the list. And then instead of doing gold, what's the next one over? Crude. Okay, but I'll put this in region 4, so it's one step down, like that. So here's all this bullish crude action right here. All right, then I just duplicate that, and then I just repeated this process, and I ended up with this really neat scanner sort of function that basically not only tells you where the market is relative to the cloud, but it actually tells you where it's been as well. So if you see something that is teetering on the top edge or the bottom edge, it's actually very easy to make sense of that by just using this format. So you could do this for the markets that you like the most, and end up repeating this process, and what you basically end up with is a scanner that looks like this. Who cares about the main price graph? You just make it smaller and smaller until all you see are these conditions. So I just find that to be a fascinating idea, and it's just really cool that you can do something like this in this program without having to write any code, really. Just a bunch of greater than and less than stuff. So that's probably where I'll end up leaving us today. I mean, I know that it's a little harder to get something out of this when I'm going through all these different examples than when I walk through it, one at a time, very, very slowly, and rebuild everything in front of you. But we will cover some more specifics next week as well. But what I really would like to see everybody do, if you feel like this is intriguing, is get a copy of the files from us. Okay, just email your rep in our office. We'll make sure to get them over to you. And you work backwards off these things with the recording that we're going to have up on YouTube and in the Charting Club. To me, it's a really, really great way to learn the coolest parts of this software. So it's to me, as someone who's watched a lot of people come and go, it's all about responsibility. And it's very, very difficult for traders to make this work because, again, you don't have an accountability structure. Even the people in your trading room and your buddies, they don't really know what you're doing, all right, unless you're sending them your daily statement every day, right? They're doing what you tell them you're doing. They're doing what they might not be doing half of what they tell you they're doing. So there's really no accountability, and one way to relieve yourself of some of the burden of holding yourself accountable is to let the chart do some of the really obvious stuff for you. Like, don't go long if all your trending indicators are pointing down. And all you have to do is decide what some of those trending indicators are, and then create a filter that turns the background red, and whenever the chart's red, don't go long, just period. And you might find that that's enough to keep you out of enough bad stuff to lengthen the life of your account to the point where you might have a shot to actually turn the corner and make this work. All right, so that's at the heart of what we're after with this. It's about responsibility, clarity, and trying to hold yourself accountable and forcing you to inventory what you are actually using to make your decisions, instead of just because you bought an indicator 18 months ago and you don't want to not use it because then you kind of feel stupid, so you just use it for no reason. All right, so force yourself to do do it the hard way. This is not easy. I mean, no one knows that more than I, believe me. I have a lot of smart people who haven't been able to make this work, but I believe that it can work. But I believe the accountability part of it is a really, really big deal, as is the decision fatigue. I think it's a huge part of the issue. All right, so hopefully you got something out of that. Thanks everybody for your comments and questions. I will get this up online within a couple of days at the most, and I will get the charting files out to all the reps in the office here tonight. So feel free to request that from them. We'll get this uploaded and we'll send the files to you if you want them, and hopefully you get something out of it. If you have any questions or you'd like to see something next week, go into the Charting Club, okay, chartingclub.com, go to contact, and then type in what you want here. All right, we're going to start building this out. It's going to be really awesome and very easily searchable. So name, last name, email. Please suggest a topic you want to see in the video. We'll put it together and get it out there for you. All right? All right, folks, I appreciate it. Thanks again. I'm going to read some risk stuff one more time, and then we'll shut the room down. We hope to see you next time. Everybody have a great week. Keep your head screwed on nice and tight, all right? We don't know what's going to happen tomorrow, of course. All right, good luck, everybody. Thank you. All right, trading futures and options on futures and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether futures or trading is suitable for you in light of your circumstances. Knowledge and financial resources may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. Alrighty, thank you again. See you next time.